Choppy day on Wall Street as the wild ride continues. Let's take a look at the numbers. The Dow had a 500-point swing today. That was on top of a 1,000-point swing yesterday. The Dow Jones Industrial Average closing down just 1942. The S&P 500 off 13, and the Nasdaq slipping 64 points. To help us understand what is going on with the crazy markets is Peter Cardillo. He's the chief economist with First Standard Financial. Our old friend Peter is back on a rise. Thank you for coming in.
Good to be back.
So let's take the last 3 days and put them into context. What has been happening?
Well, you know, what happened is simply this. For almost a year, we had a lot of compliancy in the market. There was no fear. In fact, the VIX index was at one point below 10.
And the VIX is the index that measures volatility based
in the
on
marketplace and the fear factor.
Right.
And so all of a sudden the market got a wakening call. And what was that wakening call? Well, the 10-year note shot up to 285.
The U.S. Treasury bond.
U.S. Treasury bond. And as a result of that, last Friday, the market plummeted. And it was followed by a real plunge on Monday. And then, of course, yesterday we saw a little bit of a reversal. And today, basically similar to what we saw yesterday, but the market closed a bit lower again because rates returned back up to that level.
Shouldn't the markets be pricing in an interest rate hike? Because if you look at what's going on in the world, you're going to get a little percolating inflation. Plus, we have a Fed chair who is quite hawkish now on interest rates.
That's correct. But I think, you know, reality is set in.
Yeah.
And that's what this market is all about. So right now, we're in a cyclone market, you know, and volatility is back in fashion. And I think it's going to last for a bit longer. I do believe, however, that we probably hit the bottom on Monday. That doesn't mean we can't go back down there and retest those levels. We probably will. I think it's going to be just back and forth with lots of volatility.
Do you generally think that the market run-up, which is close to 50% in 2017, was an accurate and valid run-up? I mean, we're getting great earnings news from corporations, but it's because the U.S. government is giving them a lot of money through tax cuts.
If you're asking me, do I think this was a Trump market? The answer is no. I believe the market went up on valid reasons. Obviously, in anticipation of a pro-business program, yes, tax cuts did help. But what we saw here was an asset play, a global asset play. And that's what really took the market up. Why? Because the global economy has strengthened, our economy is strengthened, and basically the fundamentals are quite strong.
And we have to remember that a 1,000-point move isn't a 1,000-point move of the old days.
No, exactly.
When the market gets to 24, 25, 26,000, you get bigger numbers with smaller percentages.
Exactly. If you go down 3%, you know, there you go, 1,000 plus. It's a question of percentage-wise being a little bit different, but it's no different than it was in the past. It can offer scary moments.
And scary. And let me ask you about the specter of inflation. Some are predicting, the Fed is estimating a 5% or better growth rate in the first quarter GDP. That would be an economy that steam is coming out of the side. We're a pretty mature economy right now. Is that a valid estimate? And
for this quarter? Yeah, I'm looking for about 4%. You know, and
that would be tremendous, yeah.
Yeah, and so obviously we've broke that chain of 2.25% GDP. Will it last all year? I don't think so. But the key is wages. Now, we did see a big pop in wages last month. I think there'll be a follow-through next month, but not as aggressive as we saw last month.
Yeah, that was the complaint about Janet Yellen's policy for a number of years, is that wages were not going up, that an asset, some would say an asset bubble, was being created with all the stimulus money going in, but real Americans weren't feeling that. And
exactly. And you know, there's an old saying on Wall Street, what's good for Main Street is not good for Wall Street. And so when things are hot and things are going good, guess what? The market rethinks that because the market has already discounted. And this market has discounted a lot of positive news.
Last question. How will the everyday American identify inflation in the market? Is it going to the supermarket and just seeing more expensive prices? When should they get concerned?
Well, you know, right now inflation is still pretty much contained. But speaking about the supermarkets, we've had inflation for a long time. Food prices have been up, you know, sporadic in certain places. But
yeah, a lot of people have said that the inflation numbers are bogus because food costs
right,
more and
exactly,
gas costs
right.
more and real things
What
cost more.
really has not taken place just yet is a steep rise in energy cost, and I think that's coming.
And we're seeing oil go up. Peter Cardillo, Chief Market Economist for First Standard Financial. Thank you.
My pleasure.
Welcome back to Arise.